All right, and we are live. So welcome back to Dapp University. So today we got a lot to talk about in our live stream. I'm going to look at the case for Ethereum going to $10,000 by the end of 2022. We're going to look at lots of other news updates that have happened in the space since our live stream yesterday. Again, we do these live streams Monday through Friday on this channel. Just subscribe. You can turn on notifications. You'll find out about those whenever we go live. Okay. We're going to check out the crypto markets, see what happened yesterday, why things look like they're potentially correcting, what happened. I'm going to look at that. I think it had actually something to do with what went down the news yesterday during our live stream, so I'll elaborate on that. I'm going to answer some of your questions and a whole lot more. So if you're new around here, hey, I'm Gregory, and on this channel, I turn you into a blockchain master. So if that's something that you're interested in, then smash that like button down below for the YouTube algorithm and subscribe to this channel. And if you want to learn how to master blockchain step-by-step start to finish, then head on over to dappuniversity.com/bootcamp to get started today. So we got people jumping out in the chat here. We got Culture Hives, CodeChap, Ethan, Vlad, Jacob, it's XCal, hope I'm saying that right, Venture Warrior, NDEs are amazing, Ajit, hope I'm saying that right, Machiavelli, welcome. All right, so let's jump into this. Well, actually, first of all, hope everybody out there is staying safe on the internet on this fine April Fool's Day. So I want to make sure I added that in the video title. This is not an April Fool's joke. That I want to actually look at the case for Ether or Ethereum going to $10,000 by the end of 2022. So we'll go ahead and jump into that. All right. So let me just pull this up on my screen here. So yesterday, Arthur Hayes dropped an article outlining why he thinks that Ether can go to $10,000 per coin, above $10,000 per coin. Actually, he says north of $10,000, this year. Okay. So if you're not familiar with who Arthur is, he's a co-founder of BitMEX, has had some run-ins with the law over the past couple of years for sure. Regardless of, a polarizing figure, regardless of how you feel about Arthur, he's had a lot of influence on the direction of the crypto space and has called a lot of things well ahead of when they've happened. Okay, famously called Ether a double-digit S-coin, like I try to keep the show family friendly here. We even talked about that in the article that he was talking about how Ether was going to 2 digits. It went to 2 digits. Okay. So of course not everything Arthur says comes to pass, but he has made a lot of calls, and when he speaks, we listen. Okay. So let's actually look at this and look at some of the justifications for why Ether could go to $10,000 by the end of the year. Okay. So this is actually a really great article. I'm not going to read the entire thing on the screen here, but let me put the link in the chat so that you all can read it. But I'm going to go through the really important parts here. So basically, we'll start at the end of the conclusion, okay, which is what I was saying at the beginning of this video, which is basically, it's a pretty long article. Let me see if I can find it. The final conclusion of the article here, if I can actually get to it. So we're basically, with everything that's going on now, with the dust settles by the year end, I believe ETH will be trading north of $10,000. Okay, so reverse engineer that. So it's actually a really great article if you want to sit down and kind of get into it. He's a really good writer, or whoever he's using to help write these articles. I'm not sure. Is doing a great job. It's really entertaining to read, so I highly recommend actually just sitting down with a cup of coffee or something like that and going through it. It's super entertaining. He talks about how basically you have all these, financial advisors that have broken incentives, okay? Not just financial advisors, but everybody who's in the business of, helping people make investments in any way, that the structure is basically broken, where basically they're incentivized to do things that earn them better commissions, not necessarily what's best for their clients, okay? And then he's using that like framework to say, okay, well, how do we get these people, like how do we convince them to look at this crypto thing and to look at, Ether as kind of his next conclusion. Okay. He kind of talks about how he goes skiing a lot and how he's on the ski list with people who are, going to business schools and giving horrible advice. And he's like, hey, well, that's why you're out skiing and your clients are working a day job. So he's got a lot of clever one-liners in there. Definitely recommend checking out the full article. But anyway, let's talk about his justification for ETH going to $10,000, okay, north of that this year. So really, let's start with the thing that he's talking about, like how he would convince, somebody who gives financial advice, to actually, consider Ether as an attractive investment. Well, first of all, Definitely talking about what's on the roadmap for Ether this year, which is the proof of stake merge, where Ethereum moves from mining to validating, or proof of work to proof of stake. All right, where you can take Ether and actually stake it to the network and earn passive income reward. Okay. And so he talks about what we've been saying on this channel for months and weeks now, which is basically, let's see here. I should make sure. Sorry, I was making sure my connection was okay. He's kind of outlining inside this article what we've been saying for months here, and recently recapped, which is basically the staking rewards for Ether being in the ballpark of like 10% when you talk about staking rewards plus the actual fees paid to validators. That's the block subsidy plus the fees here, like paid by the network. And so essentially, he's talking about likening ETH to a bond in that regard, and that's definitely language that a lot of the financial folks can kind of understand. And then talking about what the downside risk is for that bond, and then but it's an infinite bond, like it just pays out like forever. Okay, which is totally different. And that's like, it's a mind-blowing type of thing that could cause a lot of people to say, oh yeah, this is something to definitely take seriously, especially compared to something like Bitcoin, for example, which is really just the narrative being kind of a store of value, which he talks about later in the article as well. And he kind of goes to the chart, he crunches the numbers. If you actually want to see what the best guess scenarios are for ETH staking rewards, you can kind of see a breakdown of that in this article here. You can basically see the math actually drawn out. I think it's pretty good. You can see basically like what's the APR from the blockchain, what's the APR from like fees and stuff like that, and what could be on the high end, what could be on the low end, based on different timelines. Okay, so and then he kind of expresses that in bond terms. If you're liking that to a bond, what would that look like? Yield to maturity. This is like the language that a lot of financial folks are going to be able to understand. So that's super, super bullish. So compared from ETH to other assets, right? Like other layer ones, okay? Well, he also talks about bond derivatives, about how you can basically use ETH and lock it up and take out loans against it, right, with other protocols like Lido, Binance, and Rocket Pool, okay, and how that's a big factor in his projection here. Basically, utility value of what you can do with Ether, the asset itself, which is one of the things I talk about so much in this channel, is like, hey, if you have something that's more versatile that gives more people reasons to use it, then that can, increase the demand for the asset itself, and especially as ETH like transitions to ETH 2.0 proof of stake, okay, and we're actually reducing the amount of ETH that's created by the blockchain, that ETH can become deflationary, okay, and that's going to have a huge impact on this. So if demand increases and the supply is decreasing at the same time, it's insanely bullish, okay. So he talks about collateral, talks about a lot of this other stuff, but let's talk about the next important thing, which is like alternatives, okay. So he is actually talking about ETH in percentage terms having a bigger upside than many of the alternative layer ones at this stage in the game, and also Bitcoin itself. It's kind of a controversial take because lots of people think that, everything in the crypto market right now, the ranking is kind of determined, where it's like, yeah, Bitcoin's got a certain amount of upside, Ether's got a certain amount of upside, and then all the other layer ones, have a certain amount of upside, and that you don't know which layer one's going to take off, but one of them is going to have more upside than Ethereum, so you spread your bet across those, and like you're likely to outperform, which that's also kind of got a flawed logic too, because you have to pay for the losers and hopefully find that winner, right? So he actually says the opposite. Like he is saying that right now ETH's price relative to where it can head is undervalued. Okay, so that's pretty bold, but that's what he says here. And he kind of breaks it down, talks about the different price per address, price per developer, okay, and how the ETH price relative to its fundamentals is very, very, very low, okay, and therefore it having a big upside. So, he also talked about Bitcoin as well. All right, and then basically that's his final conclusion, is that, when the dust settles at year end, I believe that ETH will be trading north of $10,000. So it's pretty crazy. A lot of big justifications in there. There's a lot of people who just think that like, it's not going to happen. I'm kind of bearish on crypto right now. We got to prove it, right? The market's got to really turn around before we start, seeing the fundamentals for this type of stuff actually, grow legs and watch the price actually gain that momentum. But like I said at the beginning of this video, whenever Arthur speaks, we listen. Okay. So again, check out that article. I'll put a link in the live chat replay. I'll make it easy on you. But let's actually look at kind of what happened with the crypto markets yesterday, because I think some people are having a little bit of disbelief, I should say, because we kind of saw a dip. All right. But to me, that dip looks like it's quickly getting bought up. Again, not financial advice. I don't know exactly what's going to happen in the short term. But yeah, past 24 hours, basically we saw, Bitcoin and pretty much every other major crypto take a dip here. All right. And now we're seeing that dip kind of get bought up. So let's be patient and see what happens. It still looks like we're in this uptrend. But let's look at some news that happened yesterday that I think was a huge factor in this. And that's basically what's going on with, some policies over in Europe. Okay. So let me pull this up. I saw a lot of people talking about crypto across different, avenues, and almost nobody was talking about this, but I think it is actually the factor in what happened yesterday. Again, cryptocurrency prices going up and down always have multiple factors, but sometimes the news is a factor for short-term price stuff. So let's pull this up. So this was yesterday, and this actually happened about when we were having our live stream, but we were already kind of in the throes of that, so I figured I would just bring it up today. So basically, the committees of the EU Parliament voted in favor of the FTR compromises, D and E, that cracked down on unhosted wallets. Okay, so there's some language in here, but we'll kind of demystify some of that. So entire regulation draft to be voted on later today, but we'll certainly go through. A breakdown of the vote, more updates in this thread. It's basically very thin margins. Okay. Let's just see here. I was trying to find some language that explains exactly what's going on here. This is a breakdown of the vote. Hold on, I had a link pulled up. All right, let me pull up a different resource. Hold on a second. I think this explains it better. All right, so this explains it better. I'm going to use this as a resource to help clarify this. So EU Parliament passes privacy-busting crypto rules despite industry criticism. Okay, so lawmakers are set to end even the smallest anonymous crypto transactions, a plan that measures that could see unregulated exchanges cut off. Okay, so basically, the EU voted yesterday in favor of a controversial measure to outlaw anonymous crypto transactions, a move the industry said would stifle innovation and invade privacy. So more than 90 lawmakers voted in favor of the proposal, according to the document set by CoinDesk. All right, so proposals are intended to extend anti-money laundering, or AML, to the crypto sector. They also scrap the floor for crypto payments. So payers and recipients, even of the smallest crypto transactions, would need to be identified, including for transactions with unhosted or self-hosted wallets. Okay, it's not just exchange wallets, but also just if you own your own wallet. So further measures under discussion could see unregulated crypto exchanges cut off from the conventional financial system. All right, so that caused a lot of panic yesterday. I think that has a significant impact on what we saw with crypto price action over the last day. Okay. So what are my thoughts on this? I don't think it's good. I mean, I don't think it's good for the crypto space by any stretch of the imagination. But it is confined to the EU. All right. So it's a limited scope. And honestly, I don't think it's going to have it. This is not all said and done. Okay. I am not an expert in what the legislative process is in this area, okay? So to take this with a full grain of salt. But from what I read about this is that it's not all said and done, that there is a potential way that this would not come to pass like we think it's going to, but it very well could, okay? So it's not a done deal, but it looks like it's headed that direction. So, I mean, what does this mean? The good news is I don't necessarily think that this has an influence for, like, what everybody else is going to do. You know what I mean? And I don't think that it's a deal breaker for crypto on the whole by any stretch of the imagination. Although I think, some people think that in the short term, they get panicked with the markets and the prices change like that. So, one of the biggest fears for crypto is that a lot of people have, that is an apprehension for them getting into the space, is not knowing what was going to happen with regulations, the regulatory uncertainty, okay? And one, benefit to this, even if you have regulations that are unfavorable, that basically suck, that nobody wants, the fact that there's clarity on what it is, kind of long term, it dispels the doubt for people. Because I'll put it this way. My whole position is that crypto can exist just fine without regulations. All right, it already has, and it has regulations on it already. Like, you can't just there's a lot of stuff you just can't do. But there's a lot of gray areas that we're like, hey, how are you going to regulate this? How are you going to regulate that? And that's where the regulatory uncertainty is. And my whole position is that a lot of those things can exist just fine without regulations, but I'm a realist in thinking that regulations are coming, and so the best thing that we can do is fight for the best trade-offs we can get. Now, I'm also a realist in thinking we're not necessarily going to get the best trade-offs that we can get in every single area, and that there's going to be some upsets in crypto that there's really nothing you can do about it, all right, in terms of what the actual policy is. So even in those cases, okay, where it's not the best, most favorable regulation possible, the fact that you get clarity on it over a long period of time can still have a positive, effect on the overall adoption of crypto. Because people are like, well, now we know, we're not just sitting here scratching our heads. Because that's one of the biggest fears, is people don't want to put their money into something that, they're like, hey, am I going to have limited access to this? Or if I buy into it, or, if I buy into it, is it going to get outlawed? You know what I mean? So at the end of the day, what this is doing is basically limiting who can do anonymous transactions, okay? Which I'm definitely not in favor of. I'm definitely an advocate for privacy. But it doesn't mean you can't use crypto. Like, that'd be even worse. Like, if it was like, hey, you just can't do crypto transactions. That's terrible. This is not as terrible, but I don't like it. Right. I want to be very clear about that. So the other thing is, certain exchanges being cut off from the financial system. That's definitely not as good either. I think it's gonna, it's gonna change how it's gonna, it's a big fact. It's going to change the competitive nature of the landscape for sure. What can you do to compete? What can you do to retain customers? People are going to have to shift probably how they operate. Now, I don't know how it's going to work with decentralized exchanges. That's the real question mark. So let me know what y'all think down in the comment section below. Somebody says that ETH becomes deflationary. Where do staking rewards come from? It's a good question. And the follow-up question is, the TX fees being burned will outweigh the newly minted coins, ? That is correct. I'll show you that on my screen here. So basically, if you look at ultrasound.money, it's a website. You can look to see what's happening with the Ethereum supply. Okay, this is a really great tool to illustrate this. So right now we burn Ether whenever new transactions are created. So you can see, how much ETH is getting burned every single block. Anytime this is north of 2 ETH, that's a deflationary block right now. Now, not every block is, there's a block north of 2 ETH, right? Burned. So not every block is deflationary right now. So right now, ETH's not deflationary. It's inflationary because, there's new ETH created by the blockchain every single block, and you got to burn more ETH than is created. So right now, you can see on the left, on a annualized basis, based on the last day's data. So basically, if you take yesterday's or the last 24 hours amount of ETH burn, you extrapolate that over 365 days, that means you burn 1.9 million Ether per year, okay? And the current issuance, which you don't have to extrapolate, is 5.4 million ETH per year. So right now, ETH is about 3% inflationary. So if you simulate the merge and you actually change the amount of ETH issued per year, you see that drops like crazy. So right now on an annualized basis, we're issuing 5.4 million Ether per year, but we go down to 0.5 million ETH per year. Like, that's insane change. That's why it's called the triple halving. 4% annualized down to 2%, down to 1%, down to 0.5. Okay. Halves 3 times. It's absolutely crazy. So anyways, that makes ETH, with just the current network utilization based on the last day's data, minus 1.2% inflationary or 1.2% deflationary on an annualized basis. And you can pull that out over 7 days data based on the last 30 days data, all data. All right, if we average the same usage since this was implemented, you'd be, minus 2.2% inflationary, 2.2% deflationary on an annualized basis. So let's see here. So will crypto be the future or just a boom? I think it's the future for sure. We're talking about technology being adopted twice as fast as the internet and the growing number of use cases. Twice as fast as the internet was in the late 90s, okay? And so, that's insanely fast. And that doesn't look like that's going to really slow down on the grand scheme. I mean, it'll slow down some as it continues to permeate the total population, right? Like, not everybody's going to use it. Like, not everybody has a cell phone, but a lot of people do. Suppose it's scarcity to drive the price up based on tokenomics. Yeah, totally. So this is 10K ETH would be a $1.2 trillion market cap for ETH alone without a major burn reduction. A little hard to believe without a $2+ trillion Bitcoin cap. Let's see that. Somebody says just leave the EU. There'll probably be some people leave the EU. Somebody said I see the CME gap future chart of BTC. It perfectly filled and it moved up quickly. I didn't watch the CME gap, but I think the CME gap's a little superstitious. We had a big CME gap in I'm pretty sure we had a big CME gap in 2020 that didn't get filled. Like, whenever we were going up like crazy. Basically, I'm pretty sure we had a gap that was like around like $10,000. And then when Bitcoin rocketed off like past $20,000 in 2020, everybody's like, hey, all CME gaps get filled. We're waiting for it. It never happened. You can correct me down in the comment section below if I'm wrong, but I'm pretty sure I remember that. I just don't pay attention to them. There's some data in crypto that I think is just completely irrelevant. Sort of like, if you're talking about network adoption, sometimes the smaller stuff is kind of just noise and superstition. Someone says yes, but 9 out of 10 happens. Yeah, I see that. Like likelihood. Speaking of which, we can check on our let's check on our little bit of our technicals here. So we're still battling for the 200-day moving average. I think that's one thing that a lot of people are watching out for. Again, a lot of these technicals, like, I don't necessarily think are that big of a deal in the grand scheme of things. You know, I'm a huge proponent of network adoption, tracking the larger trend, but in terms of short-term price movements, you know, this 200-day moving average is a pretty important level for people who are like want to go completely risk on. So basically, like, you know, this 200-day moving average is basically looking at Bitcoin's past price performance and, you know, comparing its current price to it, right? I'm looking at the weekly candle chart here. But basically, like, I think why a lot of people are watching it right now is because that 200-day moving averages has been has been a strong resistance point in prior bear markets, okay? So, like, you know, in 2018, like, we kept just going up to 200-day moving average and getting rejected. You know, going up and getting rejected, going up and getting rejected. And, you know, in the previous bull cycles, it was like, we're just bouncing right off that thing. You know, it's like, we're bouncing off the 50-day, but, you know, well above, like confidently above in these cycles. So a lot of people argue that, hey, it's not that important right now. Look, we dropped below it in the last thing, came out, made a new all-time high, although barely, right? But it's one of those things where it's like, if every single indicator tells you that things are bullish, like, that's more likely bullish, which is why I think a lot of people are watching that 200-day moving average. Same for ETH, same for a lot of these other assets. All right, everybody, that's all I got for today. As always, smash that like button down below for the YouTube algorithm. Subscribe to this channel if you haven't already. That helps put videos out so the more people learn about blockchain. And if you're as fascinated with this technology as I am, you want to get your hands dirty, how can you get started today? Well, you can go to my YouTube homepage. You can find my free courses there. They're like Udemy courses, but they're totally free. And if you like those and you want to take the next step, or hey, maybe you'll take a master's shortcut entirely, I actually become a blockchain master step-by-step start to finish over at dappuniversity.com/bootcamp. You get being an expert to get started today. I've helped people with zero coding experience become real-world blockchain developers in a matter of months. So that's all I've got. Until next time, thanks for watching.